So something that came up a few times with clients this weekend was what's a good option or what's the best option for me, being that my credit score is below 660. So in most cases, I would lean towards an FHA mortgage in those instances, because on an FHA mortgage, the credit score adjustments for interest rate aren't going to be as stringent as that of a conventional loan. However, in the case of this particular client, they actually have student loan debt, a significant amount. They had over $100,000 in student loan debt. Now, with an FHA mortgage, when you have student loan debt, whether it's in deferment or you're on an income-based repayment plan, whatever the case may be, we actually have to use either 1% of the total student loan balance or the fully amortized payment in order to determine what payment needs to be used in qualifying. Now, think about that. If you have $100,000 in student loan debt, 1% of $100,000 is $1,000. That means that we'd have to use a $1,000 payment in your debt to income ratio, and that's the ratio between what your monthly expenses are and what your monthly income is. So we'd have to use $1,000. That would certainly eat into your buying power, and in this case, it really ate into their ability to qualify for that mortgage and for the amount that they actually wanted to borrow. Now, a better option in their case was actually what's known as a Fannie Mae Home Ready loan. Now, Home Ready loan is a conventional mortgage that allows for as little as 3% down. You do not need to be a first-time home buyer, and it actually has reduced mortgage insurance. Now, mortgage insurance is required anytime you're going to put less than 20% down on a property, assuming that you're not going to use what's known as lender-paid mortgage insurance, whereas we as a lender might give you a slightly higher interest rate than what you qualify for in order to cover the cost of the mortgage insurance, or you have not opted to pay the full mortgage insurance premium at the time of closing. Now, most individuals who are looking to put 3% down don't have the funds to pay a full mortgage insurance premium up front, so that's typically not common. However, less than 20% down, you usually have to pay monthly mortgage insurance. One of the huge benefits with a Home Ready loan is that the mortgage insurance is actually at a reduced rate. So the amount of coverage you need for that mortgage insurance that the lender does require is actually be less than that of a traditional conventional mortgage. On top of that, the biggest benefit for this particular borrower is that on Fannie Mae loans, if you're on an income-based repayment plan for student loans, we can actually go ahead and use that payment in order to qualify. So let's just say that your monthly payment towards your student loans on an income-based repayment plan is $0. We can actually use $0 on a Fannie Mae Home Ready loan as your payment. By doing that, we can actually get you qualified for a lot more than we'd be able to using FHA financing. So this is a huge benefit. On top of that, the adjustments for credit score, down payment, property type on these Home Ready loans are actually limited. So on a traditional conventional mortgage, there are unlimited adjustments, which would cause the interest rate to be significantly higher due to a low credit score like this borrower has. Well, the adjustments are capped, so the credit score is still going to be very attractive. You also get the lower monthly mortgage insurance, as I mentioned, and it's a lot easier to qualify for with the student loan debt. So, point of the story is that make sure when you're speaking to a lender that they're not just pushing you into one type of mortgage. Make sure they understand the different mortgage products and programs that are available to you based on your specific scenario, because although naturally a lender might think an FHA mortgage is a better option when you have a lower credit score, it may be more advantageous for you to look at the Home Ready option. Now, the caveat to this is that there are income restrictions on this program, although they are relatively high. And there actually are areas in which there are no income limits for these programs, and that's to be specific to what you're looking for. Now, there's a search tool available online. You can check it out, but it's Fannie Mae's Home Ready search tool, where you can actually type in a property address that you're interested in, and it will tell you what the income limit is, or if there is no income limit for that particular home. So once again, Fannie Mae Home Ready, great option for a low down payment, little as 3% down. Don't need to be a first-time home buyer. A lot less stringent rules when it comes to student loan debt. So if you have it, it's a good option for you.